All right. Welcome back, everybody. As many of you guys know, we're going to be redoing our How to Build a Weekly Range series. The last series I had did, it was well recorded. Everything was, up to speed, up to date on it. No, there's no new information that's going to come on this. It was just the actual case study for that week. In my opinion, it was a one-way protraction for the whole week, so we didn't really get a lot of back and forth. It was hard to really show you guys how, you're using this liquidity to execute on this day and have it really like tie in to the whole lesson and make a lot of sense. It was more so just a one-way price run with, I think, Tuesday, it hung around Monday's low, had taken it, and then it left for the rest of the week and just rallied up into Friday's close. So we're going in this with the idea that this week will hopefully provide a little bit better market structure in the sense that we could record the series and kind of put uh, a nice better diagram together for the week and show you guys how this is the truth behind where the real liquidity is and where you guys should be focusing your eye to. So we're going to get right into it. So this is how to build a weekly range. Now I'm going to start by just going over last week, and last week was the week of Thanksgiving. So I did not really trade too much throughout the week, but it still brought good insight to this lesson and how it's going to be used. So what I teach during this lesson is, and this is nothing more than what ICT has ever taught, but he, in my opinion, taught it more inside of a template form where this is actually going to be taking in every day, pushing it, and you're going to see how there's this underlying uh repetitive movement in the markets where something might start off very small. So what I mean by that is it might start like this, and then you see this, and your eye always jumps to this. And you always think, oh, this is a big move. This must be the move. And then the underlying move is this part, and then the real move that takes place looks like this, right? And then by the time the whole thing's complete, this is no longer that big, right? It fooled your eye because it got you used to seeing this sort of price action, how small and tight the range was, and then one quick little explosion made you kind of jump at it. And that's that manipulation that we're going to look to expose in this video in this series. So it's the same thing that it does every single week. Um, in some weeks better than others, but I'm going to share last week's, and the only caveat with last week's is it kind of closed very close to the open. So it didn't really have much movement outside of the open to the close. But it was still good to show where the liquidity is and where it's attacking. So starting off on Monday, um, you're going to track price and you want to find the highest high of the day and the lowest low. And these is what we label as initial liquidity, right? So this, it would be labeled just like this. And same up in here. Okay. And now your eye should always be focused because in the midst of what's happening in between these 2 points, there's going to be a lot of back and forth, a lot of gear grinding, a lot of time distortion where price is just going to hold in a certain area. And that's where they want to mess people up. But what's lying above and below these are going to be the real movements that are going to take place throughout the week. So you never want to lose sight of these areas. Okay. These are where the biggest movements for the week are going to come from, and even intraday. It's where the biggest movements will kind of lie at. So something I like to look at is, and if you're new, I would look at only runs on liquidity and not an optimal trade entry on the previous day, only because it gives you a trigger, right? It gives you something to look at and then study from this. Where did it go? How long did it, take to drop below it? Was it a full day? Did it do it multiple days in a row? Rather than optimal trade entry, it could kind of hang out there for a while. It could consolidate. It could take it out the next day. There's a couple more catalysts as to when we'd want to see that. In terms of day of the week specific, what, Tuesday, Wednesday creating a potential higher low of the week, then, Thursday, Friday, you could look to see that because you'd expect it to more so be in a distribution profile and deliver up to the weekly range. So, like I said, if this is our initial range on Monday, Tuesday, these are our two focal points, right? Between this low and this high, and any inefficiency drawn in between, right? So I know there was no inefficiencies here on a 15-minute. You could glance at an hour. I don't go really much more between the 5 minute and the 15 minute in terms of looking for inefficiencies on intraday basis. So I could drop into a lower time frame. I'll do a 5 minute just to see if we had any inefficiencies on that Monday price run. And pretty much what we could do here is if we have any, we'll note them. Okay, so we had two. We actually looked for this level a little bit last week and it just missed it on the Tuesday. But it's okay. It ended up delivering earlier into this week. But the two inefficiencies we have is that, and then this right here is also open right in there. Just nudged into the bottom of it right in there, but it's still open. So what you're looking for is in ICT teaches it goes from liquidity to inefficiencies, from inefficiencies to liquidity. So if this is our initial range and we drop below it and manipulates it and starts trading back up inside, your eye should jump right into this open inefficiency right here. And you should be studying your entry model, one of my entry models, or just pure clean order flow from down in here up into that um, shaded area. Okay. And then what do you do from here? So after that, so let's say, you catch a long on Tuesday, or you don't take a trade at all. You're just observing. You watch it unfold. You now move this because your new initial liquidity ranges are here. And you're actually going to see how this initial buy side liquidity is still intact. I'm going to go back to a 15-minute, but the initial buy side's still intact and the sell side is yet to be purged. And you're going to draw this and you're going to keep extending it as it's going while you're also watching that opening price at 29.35. Okay. So that should always be like your barometer in a sense where it's like, okay, if we drop below, or you could use this as a target or you could use it as wait and see if it becomes a reversal. If your ideas are long, you have, weekly objectives higher, whatever it is, your catalyst to move price higher. You could either be looking at shorts below this or longs below this, or waiting for price to come back up to 29.35 and then looking for, nice explosions up into these buy side scalping intraday, whatever that must be. But the whole idea of this series is going to be to show you that the new draw of liquidity became Tuesday's low. And you're going to keep tracking this down lower and lower up until you hit a point where it'll become like this. So this is now your new range. And you would say, okay, what open inefficiencies are left between this high and this low? And predominantly, if you have something that looks like this, where you ran Tuesdays, or my bad, you ran Monday's low, you ran up into the inefficiency, but didn't take out the buy side, and then dropped again, your inefficiency is going to be on this high down to this low. And you could grade that, you could project it, you could do whatever you want to do, but whatever open inefficiencies are left for Thursday. So that would be right up in here. And why do you go for the inefficiency? Because it had taken liquidity out on Tuesday. So once again, it went from Tuesday's low, ran it, and then traded back up inside the range into the inefficiency. The new liquidity becomes Wednesday's low, and there's going to be weeks that it'll go low, low, lower low, lower low, and keep doing that. But a lot of times you're going to see a nice reversal midweek. And it's like ICT taught, you want to see reversals ideally Tuesday to Wednesday. And they could happen Thursday, they could happen Friday. If there's news, if there's a catalyst on a news event, yes, that'll happen. But predominantly Tuesday, Wednesday, a nice low of the week forms. That's a good sign for us. And then from there, if, this is potential low of the week, this is where you could grade this in here. And you can say, okay, this is going to be the price swing. I want to see if price will drop down, give me an optimal trade entry, and then trade higher towards that initial buy side, because that's always going to be your opposing, your terminus target. Okay. Once you're playing outside of one of these highs or lows, in my opinion, let's say this. Let's say you have Tuesday's low marked up and you have an inefficiency down here. I would not want to be a seller really below this price right in here, that 27.56 below that low. If I could get positioned up in here or over here before it takes the liquidity, I'll hold it. I'll shave some off once we drop below, and I'll see if we could stab down to there. But I'm not going to be looking to take new shorts below that low. Okay. So that's kind of your landmarker. So same idea goes in here. If you could get positioned for a long below this initial buy side liquidity and you have a target above you, that's great. You could get in, you could hold it, you could scalp for it, whatever. I would not be looking to take any big movements up above that initial liquidity. So I'm gonna get rid of some of the stuff on my screen and we're gonna gear up for this week. I just wanted to give everyone a nice um, prerequisite on how we're looking at this and what we're doing. If anyone wants to know, this is a indicator. It's created by 2 degrees. And I like it because this right now is showing a weekly candle in the power of three. So it shows me the open price, the current low, the current high, and then where we are about to close in the next few minutes. And it's nice because I could be on a 15-minute chart and I could see what the weekly candle is doing. So, if I come in here and I go like this, I'm just going to remove some of this stuff. And let's say I'm on a 60-minute. I have my buy side drawn across. Okay. So let's say this is, I'll just say weekly buy side. And let's say this is my ultimate target for the week. Now, there would be more in between this. I would have this price right in here drawn across and so much more. But let's just say I'm really targeting 21,341 and a quarter. And I'm on a 15-minute. And I'm using that idea we're talking about. I'm just going to put this all back up. Actually, I'll keep this off for now. I'm using that building a weekly range idea. I could say something like, okay, 21,341 and a quarter is my main draw here. Let's say we then have a inside day, right? That might look like this on Tuesday, where say it comes down, hangs in here like this. Okay. And then you get the new day. I know it's going to be messy. This is Tuesday. And then Wednesday, I'll make red. It looks something like this. It drops down, just like our building weekly range idea. This is initial buy side. We could look for longs down in here, and then we take it up higher into the buy side. And that's how you would frame that. So I like this indicator because it'll show me how the weekly range is building on one singular candle without having to be or have that chart exactly open. Okay. So unlike these lower time frames, I could still say, okay, how close are we in relation to building a weekly range or our final draw, are we? So for this week, it would look like this. Okay, so you'd want to look at this and say, okay, markets had opened up right in here yesterday. Where's our current low of the week? It's right down here. And this gets labeled as initial sell side. Okay. And what I'm going to do is, and if I have to edit this right after the markets close, because it might change a little bit, I will. But this is going to be initial buy side. And I'm just going to keep our draw on the week. Just make it blue. But this is currently what I have. Okay. And tomorrow we're gonna work based on these factors. Now, there's going to be times where you would look for some things and not others. So that's going to be more of a developmental thing. But like in my opinion, I'm not going to look for shorts tomorrow above initial buy side, knowing that, we would be less than 100 handles away from that weekly objective. Okay. But now let's say Tuesday pops above that, and then we're hanging out, and then we see Wednesday take out Tuesday's high. Yeah, I'll be a short seller in there, and I'll like that. But you almost want to pair it with objectives. So it'd be nice to see, like I said, an inside day tomorrow, Wednesday, take the low and then move higher. But we obviously have to see. So that being said, this is our initial range, and we're gonna each day come in here. We're gonna move these parameters, and by the end of this week, we're gonna see how the weekly range got built and how if you only traded around these two levels and move them each day, how your trading would look and how much more clear these markets could actually get because they do look very hectic on the low time frames if you don't really know what you're looking for, how to use the information. So that being said, guys, like I said, my goal is to keep these relatively short. I hope you guys learned something from this. Come back tomorrow. We're going to review Tuesday's price action and how it used Monday's liquidity to help a range expansion or keep us inside of this range.